What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. As always, we have the broad market comprised of SPY, the Qs, and IWM. After that, we look at Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. We're going to go through the market from a monthly time frame first and point out some black and white levels that you guys should be paying attention to. It was a very interesting week this week, but if you're interested in getting your mind off of the overall market as a whole and you might want to look at some other setups, go ahead and sign up for our free 5 to 10 stock swing trade newsletter. It's absolutely free. Link in the description. We're also on Instagram if you want to check us out there. It's at tradebrigade.co, and we do have a live Discord server where you can chat with myself and other traders in real time. Alrighty, so like I said, we're going to be starting off with this SPY monthly chart just to give us some overall context and what the market is doing as a whole. So you can see obviously a huge red bar, no surprise there, but we did breach that support trend line that we were talking about. Although we bounced there temporarily last week, we did now close well below it. And what that means is I would be targeting our next level of support below, which is down here at 212.85. There's nothing that we have marked off lower than that, but if I were to put a number to it, it would be somewhere around here, where you can see all these monthly bars bouncing from around here at 182.50. So you can see touch, these two in here. And that would also start to be coinciding with that monthly 200 SMA. So if the market continues to break down, if we see a breakdown through 212.85, just know that our next major support on the monthly chart is over here at 182.54. Dropping it down to the weekly, you can see we did get that close below this week, well below actually our support trend line there. So that to me would signify that we want to continue lower. The major trend that's been in place for quite some time now, multiple years since 2009 just about, has been violated. So in my opinion, we will continue lower. Again, like I was saying, we should target this 212.85 support. I think that, very well could happen. So keep that in mind for maybe this upcoming week. We could come down into that level. And lastly, what I wanted to point out was this period of consolidation that we've been in. So far, the market has essentially been in a free fall downward. You can see, very, very steep movement to the downside. And finally, over the past 3 days of the market, we got some sideways action. Now, what I mean by that is this candle here, Wednesday's candle, was a large, I guess you would just call it indecision candle, where the body is very small, large wick, large tail. The next day we had the same thing, but it was what we call an inside bar, where it was inside the whole range of the prior day, and the same thing on Friday. Although it was a very red day, it still did not breach the low of that Wednesday candle. So what I'm waiting to see here is whether or not we will see a breach of that low, so we're actually going to mark that one in there. And if that low gives, then again, we're looking for that flush down to our next support down here at 212.85. And given the current context of the economy, I think there's plenty of news out there that the market could certainly come down to that 212.85 level. It seems like the logical thing to happen. However, we are open to all possibilities here. So if we do see some more consolidation within this range, it's essentially from 247.50 to the lows in here at 228.25. We'll just call a round number. So if we see a move back up to retest the upper end of that range, then I will watch for a responsive trade here where, if price comes up and we start to show some signs of weakness, then I will be looking to get short in that area. However, if we come right up to it and we're hovering right below and we're consolidating nicely below this level, it's essentially going to be a small breakout to the upside, in my opinion. If we see that happen, that consolidation, things look good, and then we see a strong break of that on some serious volume, then again, we could target our next sort of resistance area, which I would actually call this sort of double top in here, closer to 256.15 than this level in here at 259.68. So that's what I'm sort of watching for here. We have this period of consolidation, and what we need to see next is whether or not we're going to break out to the upside or the downside, and we're essentially just playing the inside bar pattern here. So we haven't looked at the Q's monthly chart yet. However, I wanted to point out how different it is than the SPY chart. You can see if we draw in our same trend line from the 2009 lows and continue to get touches 1, 2, and then 3, we aren't nearly as close to it. As you know, SPY broke that trend line. On the Qs, we're not even nearly as close to it. So we could see something happen where we see a filling of the circle here, where essentially price wants to come down and touch and meet that trend line. If it does continue to do that, again, we will look for a temporary pause at that place and then reassess to see whether or not it looks like price wants to continue lower or not. We do have some supports that should come into play before then, but again, this monthly chart might give you a little bit more context as to where Qs are instead of SPY. So the Q's weekly chart as well, it looks like we have some support coming into play next at 160.25. That comes from these two double bottoms in here, and if you continue it to the left, you can see we have some touches in there as well. So that would be a good target should we see some continued action to the downside next week. We also have that 200 SMA on the weekly, which should provide a super support, aka an intraday bounce, at least on the Qs. And lastly, bringing it down to the daily just to see, where we're kind of at here. Again, we don't have necessarily the inside bars like we saw on SPY. However, you can see it's just a very nice period of consolidation, sideways action essentially all last week, where price didn't really make a huge move one way or another. It essentially went sideways. All of these bars have very similar highs and lows. So what we're watching for is very similar, a breakout over 180, 183, watching all the shorts close their position and send, price up here to 188. Or if we see a breakdown below this level here at 169.34, obviously we can target our next level down at 160.27. And lastly, showing you the monthly chart on IWM, aka small caps in the Russell 2000. Close well below, significantly more below than we have on SPY, and obviously the Qs are still well above the trend line, but we are seeing some support come into play right here at this 200 SMA on the monthly chart. So that's interesting to note. We also have this sort of horizontal level of support as well coming in from the 2016 lows in this area. So it should be interesting to see whether or not this holds, the monthly 200 SMA holds. I'm not sure how many traders watch that monthly 200 SMA, but it is a horizontal level of support here, at least at the 94, 95-ish dollar level based on these lows. If we continue lower, we'll map out a few levels. This should act as at least a temporary support here. Previous resistance turns to support. That's at 85.37. Anything lower than that, and it looks like this could be a next level as well, which is at $75, just to play a round number. So again, the weekly chart looks very bearish. No surprises here. And finally, checking out the daily, you can see we have that same period of consolidation sort of happening here with very similar highs and lows on Wednesday, Thursday. Friday tested the highs up here. So normally when we see a rejection over a breakout to the upside of a range, we target the other end, which just, makes logical sense. So we're looking for a move back down to $96 on IWM, and then a continuation lower to 85.37 should this support level break. Alright, if you're enjoying the analysis so far, be sure to leave the video a thumbs up. I genuinely would appreciate it, and I think the YouTube algorithm would as well. Hopping right into Apple, you can see I've cleaned up the charts a bit for some clarity. Obviously, we're in some unprecedented territory, so clean charts make for a better sort of game plan and action here. So right now we are breaking down below our 238.03 support, which you can see from back here. That being said, again, with the whole market in a state of sort of falling apart, we would target our next support down below, which is at 217.13. Based on this red candle, big red volume coming in, I'm fairly confident that price wants to at least continue a little bit lower, if not consolidate sort of sideways in between these two supports. Well, one's now a resistance, and then move lower. If we did see a big move out of this to the upside, though, we are covered. We have some resistance coming into play. Based on these three wicks, really, I would call it somewhere in here, 250.25, just to play a round quarter. You can see some of these wicks pierce it, but the 200 SMA is acting as resistance in that area as well. So watch out for that on the upside. But again, I really think the move here is obviously a continuation to the downside with the whole market sort of falling apart. We could see a temporary point of support here at 223.75, just based on previous resistance turning into support once we are above it. So Netflix is sort of caught up in this chop. You can see it doesn't really want to follow the market and fall straight down, but it also doesn't want to rally really hard to the upside and continue to make new highs. That being said, where we're at right now, it looks like with the big wick on top and a red day on, I guess, normal volume, I wouldn't be surprised to see some sideways, if not slightly downward action and sort of some consolidation between 336 to 321. I know that's a really large range, but with the days, these days having $32 ranges, that's completely acceptable in my opinion. This 200 SMA is coinciding with the support at 321.21, so that should act at least as an intraday bounce, a super support. So watch out for that one. If it gives, though, obviously a next flush to the downside would be to 307.63, which has acted as touch 1, 2, and then some closes around that area as well. Anything lower, we have $300, the whole dollar mark, and then 292.27 to the upside. Our 50 SMA, rather, this blue line here, is sort of acting as a super resistance with this 356.84 level. So watch out for any retests of that one. There should be a pullback and negative reaction to it on any sort of first test. Anything anything higher, and we're looking at some pretty choppy areas up here, but 361, 375, and 386 are all resistance on the upside. So Tesla is sort of falling back down to earth after its huge parabolic move to the upside. I'm not sure whether this would have happened, whether or not the whole market crashed, or if this would have happened naturally. But usually moves like this are not sustainable, so it's no surprise to see this is pulling back absolutely in a massive way. Right now we're finding some support at that 200-day SMA, which is this green line down here. You can see that's right around 358.72. That's where these lows are in here. But we do have an inverted hammer candle up here, right at previous resistance actually, which to me would signify that the move next week is lower. Normally these wicks tend to imply that there are sellers hanging out in here and there aren't very many buyers, so price naturally moves to the downside. If this 358.72 breaks, we're looking for our next support to come into play at 327.36. Anything lower than that, and we're really looking at 289.11, and then lower than that is essentially the gap fill to this first earnings kickoff that really sent Tesla on this massive run, and that's down to 256.03. Alibaba, you can see I have very, very minimal amount of supports and resistances here just because of how choppy it is in here. This is very emotional, almost straight up right here, and then this is very choppy. So we're paying attention to just some major levels. One thing I do want to add back into here is a resistance trend line, something that looks like that, just because it's so clear on any sort of retest of that should be a very noteworthy area on the chart. So we'll keep that one in there. This certainly is an area of resistance. If we can break out above this point of resistance that we're currently at 187.72, if we can break that, obviously there's not much market structure in this whole area. So again, playing intraday supports and resistances that develop, it looks like there's some sort of indecision. There might be a level sort of in here somewhere. You'd have to break it down into an intraday chart to figure out whether or not these closes and resistances are certainly resistances or if they're altered a little bit. But pay attention to that level at 195. But anything higher is essentially this resistance at 202.05. To the downside, again, not very much structure in here. You'd have to break it down into the daily charts to really figure that out. But we do have this 169.32 as an overall major support to the downside. It's sort of where we bounced from on Wednesday. Anything lower than that, and it looks like we do have some support slightly below, and that comes into play at 162.50. Facebook is another one with very little market structure above us now, but we do have a clear resistance point up here at 159.32. So if we can break out over that, again, playing some intraday supports and resistances, as well as possibly a level somewhere in that general area at 170 as resistance in between here and our next major one up here. That's at 183, 184 if you want to play a whole number. 200 SMA and 50 SMA are rolling over big time, so expect that to act as some resistance should we get back up into that. But again, this is very wishful thinking. I don't think the market wants to bounce that hard just yet. Another thing I want to add back onto this chart is our resistance trend line, very similar to BABA, where we can connect our two highs here. Any sort of test in the future of that should be significant, so we want to keep that in mind. Anything to the downside, we are looking at support to come into play at 137.23, and below that we have a level from previous history. If we come all the way back here, you can see that's where our low is. That's at 123.46. So Nvidia looks like it's starting to have some sort of dead cat bounce here, but again, Friday's candle to me doesn't look too promising. 200 SMA on the daily should act as intraday a bounce at least if we retest that from the top side down, but we are getting rejected over this level here at 216.27. So to me, if we break $200.50 that is, then our next logical support down below is at 188.50. We could see some support come into play slightly before that at 193.20, so treat this more as a zone between that level I just pointed out. Let's grab the right tool. There we go. So treat this more as a zone between 192 and 198.50. That's sort of where it looks like we've bounced in the past. So if that gives, we're looking at 169.80 as previous support in here. Anything lower than that, and it's sort of this consolidation period over here, the lows in that area, and that's at 148.50. Microsoft is following the market more closely than everything else, having a week of consolidation just about. So again, it's very simple here. When we see these periods of consolidation, we're essentially watching for a breakout over the highs at 147.13 or a breakdown below the lows at 135.32. One way or another, something should happen when the range is broken and buyers have to either close their position because they're stopping out below the lows, or sellers have to close their position because they're stopping out above the highs. So that's normally why a consolidation like this tends to move in a very snappy way to the upside or downside when they are broken. Anything lower than that 135.32 level, and if we look back to the left, You can see we have some support coming into play around this level here. That's at 130.89. Anything lower than that, and I would call it this level in here. And that's at 118.19. Again, we're covered to the upside. We sort of have that resistance. This is very choppy in here, so play anything intraday in the meantime. But our next major resistance is all the way up here at 162.54. And Amazon getting pretty choppy as well with news about hiring people and whatnot. We're just going to play the chart and play our supports and resistances. We're currently sitting at a support zone. You can see this red candle put us right back into this 1830-ish to 1810 support area. 200 SMA is sort of there on the daily as well, so it'll be interesting to see whether or not we hold this, see some sideways consolidation at this support, or if we break down and go to our next support below, which is sort of a ways to go, but down here to 1626 if you want to play it to the penny. Anything lower than that is 1595, and I think that's all we have to the downside. If we go to the upside, though, we are looking at resistance clearly here at 1957. That's been a strong one in the past. Touch, couldn't really find any acceptance over that level, and then rejected to the penny almost on Friday. 50 SMA will act as resistance as well before we get there, but if we can break out over it, again, we're prepared for all situations. Our next resistance to the upside should be at 2032. Anything higher than that is sort of this gap fill zone on the chart, which closes at 2086. So that's going to be all for this week's episode of the Weekly Watchlist. Again, I hope these black and white levels and scenarios that I've laid out for you provide some sort of structure for your trading this upcoming week. If you're interested in those 5 to 10 swing trade ideas that'll take your mind off of what the market's doing as a whole, sign up for that. It's completely free. Link in the description. We're also on Instagram, as I've said, and the Discord chat as well. I wish you guys a green trading week. Stay safe out there, and stay green.